Most people dream of becoming wealthy one day. They dream of financial freedom, retiring early, traveling the world, or simply never worrying about bills again. But for most people, that dream never becomes reality. Why? Because they chase the wrong investments. They look for get-rich-quick schemes. They gamble on hot stocks. They try to time the market. They follow hype instead of strategy. And eventually, they get burned. But there is one investment strategy that has quietly built more millionaires than almost anything else. It's not flashy. It doesn't make headlines. It doesn't promise overnight success. But it works consistently, reliably, and over decades. That strategy is index fund investing. An index fund is a simple but powerful tool. Instead of betting on one company, one stock, or one sector, you invest in hundreds or even thousands of companies at once. An index fund is like buying the entire market in one basket. For example, if you buy an S&P 500 index fund, you instantly own tiny pieces of 500 of the biggest companies in America. Apple, Amazon, Google, Microsoft, Tesla, and hundreds more. If one company goes down, another goes up. You don't rely on luck. You rely on the power of the entire economy. And that is where the magic begins. Most professional investors, hedge funds, Wall Street traders, even highly paid experts struggle to beat the market. Study after study shows that over the long term, around 80 to 90% of them fail to outperform a simple index fund. Think about that. Highly paid experts with research teams, supercomputers, and unlimited resources still losing to a basic, low-cost index fund. This is why legendary investors like Warren Buffett recommend index funds for the average person. Buffett himself said that if he were managing money for his family after he passes, he'd simply put 90% of it into an S&P 500 index fund and 10% into short-term bonds. That's it. No complicated strategies. No gambling on stocks. Just steady, long-term growth. So why are index funds so powerful? There are a few key reasons. First, diversification. When you buy an index fund, you spread your money across hundreds or even thousands of companies. If one fails, it barely affects you. If one skyrockets, you benefit too. It's like having a safety net built into your investment. Second, low costs. Most actively managed funds charge high fees because you are paying for managers, analysts, and trading costs. But index funds are passive, they just follow the market. So fees are extremely low, sometimes as little as 0.03%. That might sound small, but over decades, the difference is huge. Imagine two investors each put in $10,000. One pays high fees of 1%. The other invests in a low-cost index fund with 0.03% fees. After 40 years, assuming a 7% return, the low-cost investor could have tens of thousands more just from saving on fees. That's money staying in your pocket instead of going to Wall Street. Third, compound growth. This is where the real magic happens. Compounding is when your investments make money, and then that money starts making money too. Over years, then decades, compounding transforms small amounts into massive wealth. For example, if you invest just $500 a month into an index fund earning 7% annually, in 30 years you'll have over $600,000. In 40 years, over $1,200,000. And that's just from consistent investing, not from gambling, not from chasing hype, but from steady compounding. Fourth, peace of mind. With index funds, you do not need to constantly check the market. You don't need to worry about earnings reports, company scandals, or sudden stock crashes. Because you own the entire market, you ride the natural long-term upward trend. And history shows that despite short-term crashes, the market always grows over the long term. Just look at the S&P 500. In the last 100 years, it has survived world wars, depressions, recessions, pandemics, inflation, and financial crises. And yet, it has always bounced back stronger. Investors who stayed consistent with index funds grew their wealth through all of it. Now, here is what most people get wrong. They expect quick results. They invest in an index fund for 1 year, maybe 2. And when it doesn't double overnight, they get impatient. But index fund investing is not about quick wins. It's about slow, steady, unstoppable growth. It's like planting a tree. You don't plant it today and expect shade tomorrow. You water it, protect it, and give it time to grow. And years later, it gives you fruit, shade, and strength for life. That's what index funds do for your wealth. Another mistake people make is stopping when the market crashes. They panic, sell low, and lock in their losses. But smart investors know that market downturns are the best time to buy. When stocks are down, index funds are on sale. That's when your future wealth is built. Think about the 2008 financial crisis. The market crashed over 50%. But those who kept investing in index funds not only recovered, they grew massively when the market bounced back. The same thing happened in 2020 with the pandemic crash. Index fund investors who stayed the course came out far wealthier just a couple of years later. Consistency is the key. If you keep investing a fixed amount every month, whether the market is up or down, you benefit from dollar-cost averaging. That means you buy more shares when prices are low and fewer when prices are high. Over time, this smooths out the ups and downs and builds wealth steadily. And here's the best part. Anyone can do it. You don't need to be rich. You don't need to be an expert. You don't need to study the stock market every day. With just $50, $100, or $200 a month, you can start building wealth with index funds. And as your income grows, you can increase that amount. It's simple. It's proven. And it works. Now, let's talk about the long-term vision. Imagine you start today. You invest consistently for 20, 30, even 40 years. You don't panic during downturns. You don't chase hype. You just keep putting money into index funds month after month. By the time you reach retirement, you could have hundreds of thousands, even millions, sitting in your account. That's financial freedom. That's peace of mind. That's the ability to live life on your own terms. And here's the real power. Index funds don't just build wealth for you. They can build wealth for generations. If you invest not just for yourself, but for your children, your grandchildren, and beyond, you create a legacy. A legacy that grows long after you are gone. All from a simple, disciplined strategy. So while most people chase quick money and fail, you can choose the smarter path. The boring path? The path that works. And that path is index fund investing. Remember, wealth is not built overnight. It's built slowly, steadily, quietly, over years of discipline and patience. The world will always have hype stocks, flashy investments, and people promising shortcuts. But real wealth comes from time in the market, not timing the market. Index funds give you the power of the market, the safety of diversification, the growth of compounding, and the peace of mind of low costs. It's the ultimate wealth-building tool for anyone willing to be patient. So if you truly want to build long-term wealth, start today. Open a brokerage account. Pick a low-cost index fund. Set up automatic monthly contributions. And then forget about it. Let time, compounding, and the power of the market do the heavy lifting. Because the truth is, the earlier you start, the bigger your results. And every day you wait, you are losing potential growth. So the question is simple. Will you keep chasing quick money and falling behind? Or will you start building lasting wealth with index funds slowly, quietly, and powerfully? The choice is yours. If you found this video valuable, make sure to hit that like button. Subscribe for more financial wisdom and strategies. And drop a comment below. Are you already investing in index funds or are you planning to start today?